What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Intel Corporation, ticker symbol INTC. They just reported their Q1 earnings after the bell today. We're going to jump over to the numbers, the profits, the revenue, the earnings per share. We'll take a look at the balance sheet and cash flows as well. Take a look at everything that's going on in Intel's world. And then we'll also jump over to the stock chart. Got this spread way out. Okay, we got like a 2-year view here. I wanted to show you some price action, show you where potentially the stock could be trading here in the coming weeks ahead. Now, Intel year to date has been ripping higher, up 27%. They announced a new CEO not that long ago, and he's making some major changes. We've got a 2% dividend yield on this one and just a 13.86 forward PE ratio on that one. That is pretty low compared to most tech stocks out there. Now, they topped estimates on their Q1 earnings. They also raised their full year guidance, and I think they raised profit guidance as well, or at least earnings per share guidance as well. So that is a positive. Now, we are seeing that the stock is trading down just slightly in the after hours. The conference call probably will be critical. It also traded down during the regular session, although most stocks took a hit today when the president announced that he wants to raise the capital gains tax by like double. He basically wants to double it, which would really send shockwaves to the stock market. Might talk about that another time on another video, but let's stay focused on Intel. So Intel is looking, like I said, they've got this new CEO, and I heard an interview with him on CNBC, and what he's talking about is he wants Intel to become a foundry. So what a foundry is in the chip space is a partner like Apple or a partner like GM or maybe even like a Tesla or something like that will come to Intel with some demands, with some specifications. Intel will help them build the chip, will help them build the computer chip to their specifications. Instead of Intel's business model now, where they kind of develop the chip and then they sell it to the consumer, it's actually they're going to just serve as kind of like the manufacturing partner to these people, allow them to do some of the R&D and the specifications of the chips, and Intel will essentially make that chip to order. That's it in a nutshell. It's not a business model that Intel's been involved in, but they want to get in it in a major way, and they're going to need a $20 billion investment to build 2 facilities in Arizona. So this is an interesting pivot to what Intel is doing, and I think if you have patience, I think there's quite a bit of demand that will likely be here. Now, so we're seeing in the auto industry, there's a chip shortage. And guess what? Intel says within 6 to 9 months, they might be able to reach a deal with some of these automakers and start to have automakers use their chips. Now, a lot of automakers use TSMC, which is like the foundry giant, and they are currently running over 100% capacity. The other advantage as well is Intel will be making these chips here in the United States. And we've seen with our last president and the current president, there is a desire to make this stuff here in America. So Intel could have a competitive advantage there as well. We're just going to have to wait a few quarters for that. Now, on the competition front, unfortunately, NVIDIA is coming after their data center, and they are launching their first data center CPU, and that sent Intel and AMD stock lower when this was announced. NVIDIA, when they get into something, probably not great for the competition. But when we talk about the data center, there's probably broad enough demand here that, and demand for data centers, that it's probably going to be able to have profits for NVIDIA, AMD, and Intel. It's just Intel has been dominating in that sector for a while now. Now, we've got our earnings here. 3 months ended. We got March of last year. Here's our most current quarter as well. We've got this net revenue line basically flat, down just slightly. Now, we've got cost of sales. We're actually seeing that tick up a little bit. So we had some margin compression over at Intel, flat revenue, and we see here our gross margin went down from $12 to $10.9 billion. Now, let's take a look at what's going on the cost side. We've got R&D here. That ticked up. Again, I think you'd expect that because they are doing this massive investment over the next few years to build these plants in Arizona and kind of pivot the business model to kind of a foundry business model. You got marketing, general, administrative. That's down a little bit, but then you've got these restructuring and other charges boom, that's going to blow up your operating expenses. Take a look. Operating expenses coming in at $7.1 billion. Again, driven by higher R&D and these restructuring and other charges. Last quarter, it was $4.9 billion, so up considerably. So you guessed it, operating income got obliterated over at Intel, basically cut in half. We went from $7 billion down to $3.7 billion on operating income. That is not good in a vacuum, but again, when you factor in what they're trying to pivot to here at Intel, you're kind of building for the future in this one. You've got to have vision and belief that they're going to be able to do that. Now, you've got income before taxes at $4 billion. They were at 6.6 in the previous period. Net income coming in at $3.3 billion. They were at 5.6. We earned 82 cents per share. I talked about how they pay $1.39 in dividends. So I don't think the dividends really, I think they can afford to pay this dividend. So you can afford to kind of hold your Intel shares. If you believe in the future, you're probably still going to earn this dividend yield as we move forward. Now let's look at the balance sheet and we'll take a look if this is getting blown up as well based on the kind of investments that they're going to have to make. We've got cash and cash equivalents down just slightly. We've got some short-term investments as well. Those are up. Basically, those two balance each other out. All things being equal, everything looks pretty good to me. Now, inventory, I noticed, was basically flat as well. So they're working with kind of the same amount of inventory that they did. Take a look at this. Actually, our total current assets right here, basically flat. So there's not a lot here. They've got some assets that are holding for sale and things like that. All things considered, pretty clean balance sheet on the asset side. Not much has changed since the beginning of the year or so. Total assets coming in at 150, again, down just slightly, just, pretty consistent. Now, on the liability side, they haven't really taken, they've got a little bit more short-term debt that's due, but that's not really a big deal. We've got our longer-term debt down here. That appears that it just flowed up here. All things being considered, pretty much a flat quarter from a balance sheet perspective. Now, from the cash flows, we pull down that cash and cash equivalents. Actually, it's weird. Here's our net income. So they show you cash and cash equivalents here. Then they pull down that net income number, which we talked about basically got obliterated. Now we're at 3.3 billion. We were at 5.6 in the previous quarter. We get to add back in some things like depreciation and these restructuring charges, which I don't necessarily think are going to be one time. I think they'll be recurring at least for a short time, but you can X those out. And take a look, net cash provided by operating activities still down over last year. Okay, we were at 6.1 billion, but we're down just marginally to $5.6 billion. Now, we've got our investing activities here, basically flat year over year. Not a whole lot going on there. We still are repurchasing our stock here. We did $2.3 billion in the quarter. We didn't issue any debt. We did that a lot last year. Take a look. Most companies did this in March, April of last year. They just withdrew on their credit line. Okay, they didn't know what was going to go on with the pandemic. So they basically went to the ATM and withdrew a bunch of cash. That's literally basically what a bunch of companies did. They didn't feel like they had to do that with this year. So all things being considered, cash flows looking pretty good over at Intel. Let's jump over to this stock chart. This stock chart, it looks to me like it kind of reversed today, okay? Or it's been reversing over the last couple days. Notice that we had a big blow off over here. This is back in February, right before we kind of had that virus come to shore here in the United States. We popped up over 64, got up to 68, and this thing came all the way down to $44 in the matter of, a month or two. This thing just sold off rapidly, came all the way back up to the $64 range, gap down, came all the way back down to 44. And then we clawed our way all the way back up over 64, back up to basically these highs that we made here. And now we're seeing a reversal again. And so how low, how much will this stock reverse? I think that's a good question to ask. I think if you want to redraw this trend line, we were actually in a pretty well-defined uptrend on this one, something like this. And then it broke the other day. Once it broke $64, which is what's our level here, it acted as resistance here, Once you broke above it solidly, it gave us the momentum to get all the way back up to 68. But we broke the $64 level, and now we're sitting right here at 61. I think that is a natural area where this stock will hang out, but it's kind of hanging on a cliff in my opinion. $61, $62, kind of an area where I wouldn't necessarily be super excited. And also we've broken kind of a shorter term uptrend on this one. You get a pull back into 58, 56. These are more attractive areas, but again, our trend will be broken. This price action down here from 45 up to call it about $52 would also potentially come into play on this one. I think here's the deal with Intel. Because they're kind of pivoting their business model, they're going to have to do some massive investment. Now, I know that they upped guidance, they upped profit and things like that. But I think in the long run, I think you've got some time to get into this stock if you want to. The other question that you want to ask yourself, if you want to get into chip makers, look, there's AMD, there's NVIDIA. And so you want to ask yourself how you want to construct this portfolio, not necessarily just speaking of Intel in a vacuum. You want to ask yourself, well, could you put some money into NVIDIA? Could you put your money into AMD? Could you build a little bit of a portfolio here so you kind of capture a lot of this business as well? So that's kind of what I would be asking myself. Now, if you own some Intel shares at a higher price, I think you might want to average in at these areas. If you bought it at a lower price, I wouldn't necessarily be looking to sell, but just understand that we've broke trend here and this stock could potentially head lower as well. And then on top of that, you got this capital gains bill that could potentially be working its way through Congress. That's going to put a lot of downward pressure on stocks, okay? It's just, there's a lot of people that will impact. That if you have to pay not 20%, but now 40% on your capital gains, it certainly makes investing in the stock market way less attractive, like just considerably less attractive. You might as well put that money to work in other areas, maybe even your own business. So we'll see how people adjust in the coming weeks ahead, and we'll see what happens in Washington. You got two things to kind of deal with now, and Intel is pivoting their business model. That's another thing that you have to keep in mind. So while I'm not super definitive on this one, some videos we do and we're like, hey, this is a buy, or some videos we do, this is kind of a sell. I'm kind of in between in this one. I like the long-term perspective. I like where they're going with this foundry play. I think it's going to take a little while to get there. And I think the stocks will have some bumps on the road before it gets to there. Not only that, I have a full allocation of NVIDIA and AMD. And quite frankly, I prefer those stocks to Intel at the current moment as well. So hopefully you guys enjoyed this video. Be back with more again soon. Good luck with your investments.